Ever wondered about the best way to invest in the entire US stock market? Total market index funds might be the answer. Today, we are going to compare a few different fund offerings that track the total market index. Plus, we'll dive into a fund that has the potential of overtaking the market in this category. Although there are many benefits, we'll also talk about the potential drawbacks. But without further ado, here are the top contenders for best total market index fund. Starting with the Fidelity Zero Total Market Index, the newest entrant in the field. This fund shook the investing world with its groundbreaking 0% expense ratio. Yes, you heard it right, 0%. In terms of performance, it has shown strong returns. With an initial balance of $10,000, the final balance grew to $22,362. The compound annual growth rate, or KGR, stands at a strong 16.57%. However, like most things in life, it's not all sunshine and rainbows. Sometimes it's about stealing lollipops from children. A common objection to FZROX is that you can't move the fund to other accounts on different platforms. Another criticism is that, despite its name, it's not a true total market index because it doesn't carry all the stocks that other funds have. Some also argue that Fidelity uses this fund as a loss leader to anchor you to buy their other funds. Yet it's important to remember that every investment decision comes with its own set of pros and cons, like whether or not to shot put a turtle. What sets FZROX apart is its 0% expense ratio, which could mean significant savings for investors. Despite its limitations, FZROX offers robust returns and an unbeatable expense ratio. Next up is the Fidelity Total Market Index, a familiar player in the field. This fund, also known as FZROX, has shown substantial growth, turning an initial $10,000 investment into a final balance of $22,196. Its compound annual growth rate sits at a strong 16.4%. Now, FZROX does have a slightly higher expense ratio than our earlier contestant, FZROX, clocking in at 0.015%. This minute difference might have a marginal impact on your returns over the long haul. However, it's worth noting that FZROX gives you more flexibility. Unlike FZROX, you can move your FZROX funds to other accounts on different platforms. The only reason why this would be valuable is if that company was paying you to move your account over to them. But then again, you could just make more money or take a different part of your portfolio that isn't an FZROX and transfer it over. FZROX offers a slightly lower return than FZROX, but is more flexible in terms of portability. Now let's turn to the Vanguard Total Stock Market ETF, a popular choice among investors. This fund started with an initial investment of $10,000, and over the course of its life, it grew to a final balance of $22,092. It delivered a compound annual growth rate of 16.3%, indicating strong annualized returns. Its standard deviation is similar to a New York cab driver, consistent with the volatility observed in other funds. The best year for this fund saw a return of 30.67%, while the worst year saw a dip of 19.51%. The fund's maximum drawdown was 24.81%. It boasts a Sharpe ratio of 0.8 and a Sortino ratio of 1.25, indicating favorable risk-adjusted returns. However, it's worth noting that the expense ratio is slightly higher at 0.03%. VTI provides consistent returns with a slightly higher expense ratio. Finally, we have the SharesCore S&P Total US Stock Market ETF. This fund, often recognized by the ticker ITOT, started with an initial investment of $10,000 and blossomed to a final balance of $22,123. The compound annual growth rate, KGR, for this portfolio came in at 16.33%. Diving into the volatility of ITOT, the standard deviation was 18.66%, and the worst year saw a loss of 19.47%. On the other hand, ITOT's best year recorded a growth of 30.67%. The Sharpe and Sortino ratios at 0.80 and 1.26 respectively show favorable risk-adjusted returns. Despite its strong performance, it's worth noting that ITOT has an expense ratio of 0.03%, which is on par with the Vanguard Total Stock Market ETF. ITOT, like VTI, offers steady returns with a slightly higher expense ratio. After examining these 4 total market index funds, it's clear that each offers its own advantages. The Fidelity Zero Total Market Index, for instance, stands out with an impressive 0% expense ratio and a high compound annual growth rate of 16.57%. Yet it's important to remember that funds like this can't be transferred to other platforms, which could limit your flexibility. Although this fund outperformed its paid-for counterparts, so why would you move it? If you want a different brokerage account, just start allocating funds that your dollar cost, averaging into a different account. It doesn't make sense to trigger a taxable event when you already picked a buy and hold strategy diversifying into a broad total market. Remember, just because a fund prospectus indicates returns, many studies say investors who pop in and out of the markets lose money, not realize those gains. There is another objection to Fidelity's Zero Fund. It's that it doesn't follow the traditional total market index benchmark by buying the same similar securities as the other funds we're comparing FZROX to. The Fidelity Zero Fund has fewer securities and they have their in-house index they reference to, which might be off-putting to some people. Here's the rebuttal. When you look at the past 5 years of performance, it's been in perfect lockstep with the total market benchmark. There are fears about Fidelity. Changing the methodology of the fund and doing a gotcha by deviating too far away from the total market benchmark. This would hurt their brand, and any deviations in performance would be obvious to anyone doing a back test. The only way that wouldn't hurt their brand is if they outperformed the total market index. You don't see the people who bring this up extending that olive branch. On a different note, if you watched any Warren Buffett videos on diversification, you don't need thousands of stocks to be diversified. Expense ratios, too, are a critical consideration. While the Fidelity Zero's 0% is unbeatable, the other funds' rates of 0.05% and 0.03% are still extremely low by industry standards. It's worth noting that Fidelity may use the Zero Fund as a loss leader, enticing you to buy other potentially higher cost funds. Not really an issue, because you could simply look up the expense of those alternate funds and do a back test to see if they perform better or worse than their peers. It's not the end of the world if they also offer other superior products. It sounds like I'm shilling Fidelity. Just look up a fund from iShares or Vanguard, then find the Fidelity equivalent and look who's cheaper and equivalent performance based on a back test. Remember to subscribe for more videos like this.